Welcome on board Tarak Patel from GMM Pfaudler, the MD, joining in on the show right now. Tarak, hi, good morning. Good to have you on the show. Help us understand what were the key highlights of the quarter gone by?
Sure. So, this quarter for us, again, has been a very strong quarter. We're building on our performance of Q1 and Q2. So we've shown good amount of growth on a consolidated basis, both in terms of revenue and profitability. The next couple of quarters looks very strong. Our order book is about 30% higher than what it was at the same time last year. And both the industry segments that we cater to, which is basically chemical and pharmaceuticals, continue to do very well. We are seeing quite a strong resurgence in the pharmaceutical sector, which is driving a lot of growth. So all in all, we're quite bullish about the future. This quarter was also slightly different from the previous quarter. We had our Hyderabad facility, the newly acquired Hyderabad facility, up and running now. We also installed and commissioned 2 new gas furnaces at our plant in Gujarat. So that added some throughput as well. At least looking forward, we believe that all our product lines have a good amount of backlog. We see a lot of traction going forward. So we expect that, obviously Q4 is something that we look forward to, but even into Q1 and Q2 of next year, we believe that the long-term prospects of the company still remain very strong.
How's the acquisition in EU panning out right now, Tarak, and what are the synergies which are being derived?
So that's a great question, and let me start off with giving you an update in terms of the transaction. The transaction was announced sometime in August, and now we are very close to closing the transaction. As of this morning, we have now received all foreign investment and antitrust approvals from the government authorities. So that's definitely a good sign. We expect to close the transaction very soon and hopefully start consolidating the global Pfaudler business into the GMM Pfaudler business by February, and at least have maybe February and March months consolidated. Definitely a lot of synergies expected. That's the rationale behind the transaction. Some of the main synergies that we're looking at is obviously the low-cost sourcing option from India, which has already worked quite well with our subsidiary in Switzerland, but this is something that we would like to bring to the Pfaudler Group. We would like India to be a low-cost hub for many of the Pfaudler facilities globally. There's also a cross-selling initiative where we can sell Pfaudler products into India. One example is Interseal, which we're going to launch very shortly. At the same time, Pfaudler has access to the heavy engineering business of GMM Pfaudler. And lastly, India has now access to new markets like Southeast Asia and the Middle East, which definitely will be areas for us to increase market share going forward.
Tarak, give us a sense as to what the outlook is when it comes to your engineering product segment. How is that faring?
So that business line also continues to do well. It's very complementary to glass line business. So if you see the glass line business picking up and doing well, you will automatically see these products doing well as well, because they're complementary in nature and they go into the same facilities that the glass line equipment are going into. However, in this segment, we have some new areas that we are focusing on. One is acid recovery. Pfaudler recently acquired some technology for acid recovery, which has been passed to us here in India. They made their first breakthrough very recently by getting their first acid recovery plant order. We in India are also very close. The Indian laws have changed significantly over the last couple of years, and we believe that the acid recovery business is going to be a growth area for us going forward. And Indian companies are now looking at complete solutions. So instead of looking at just equipment, they really want a complete automated, one-stop kind of a system that will solve all their process requirements.
All right, that's sounding very optimistic. And what is the outlook on the CAPEX cycle in pharma and some of the other segments? Is it looking robust, or do you think that it is tapering off?
So I think we are right at the beginning of the cycle. I think it's picking up. We've seen the tier 2 pharma companies investing in new capacity. I think this is really being built to cater to the bigger pharma players, but we've definitely heard of new large CAPEX plans coming up. We are also seeing a lot of the specialty chemical companies also now looking at getting into intermediates. So they are also diversifying and getting into pharmaceutical. So all in all, I think it's the beginning of the cycle. For pharma has been quiet for quite some time. And I think not only in India, I think one of the things that I should like to mention here is that our our Swiss subsidiary currently has its highest backlog that it's ever had, close to 21 million Swiss francs. This is again because of a lot of capacity being moved back into European and US shores. So people around the world are looking to build capacity so that they're not overly dependent on China.
Could you help us give a guidance for the full year, both in terms of revenue as well as margins?
So currently, obviously, we are guiding. I mean, we had started the year with a similar level of growth for GMM Pfaudler on a consolidated basis. The industry that we cater to are growing at around 15%. So we wanted to do a little bit better than that. Obviously, we had a slightly slow Q1, but we made that up in Q2 and Q3. So we're expecting the same level of growth as we have over the last maybe 2 years or so. Going forward, we believe that the growth rates will continue, but once we consolidate the overall business, we expect the company's size and scale to change considerably. We go from being around a 600 crore company in terms of revenue to close to about 2,000 crores. So obviously the growth rates internationally would not be the same as what we have here in India, but as I mentioned, there are definitely opportunities to improve both profitability and revenue, and we will look to do that over the next few quarters.
Sure. How's the expansion as well as the new furnaces and the new unit panning out, and what kind of benefits do you see derived from them in the near term?
So the new furnaces will be gas-fired, and obviously gas is much more economical than electric furnaces. We will now switch off all our electric furnaces in the Gujarat facility. However, we'll still run 2 furnaces in Hyderabad, which are electric. So that will give us definitely some improvement in the bottom line. Plus, it gives us the additional capacity. So more output. So there'll be an absorption of fixed costs. So definitely profitability will look to increase out of the Gujarat facility. And in terms of quantities produced, our Gujarat facility is now close to about 2,400 units per year. The Hyderabad facility around 400 units, plus with some of the improvements that we are making, we can easily ramp that up to about 3,000 units for the next financial year.
Okay, commodity prices have been going up for some time. What's the impact of that also that you expect on your raw material cost and margins?
Right. So raw material prices have increased. Luckily for us, there is a lag between the time we buy to the time we ship. So we are actually buying material today for orders that we will ship out maybe 4, 5, 6 months down the line. So we can definitely build that price into the products that we sell to the customers. So hopefully we can pass on most of these price increases to our customers.
Okay, and talking about the price increase as well, will that be at perhaps in the next 3 months or so?
Yes, so most of our pricing is pretty dynamic. As soon as we see any increasing in raw material prices, we then change our price list and then pass that on to the customers. I mean, the customers are buying a lot of different equipment. They're buying carbon steel and stainless steel for their buildings as well. So they're very aware of the steel prices and they have no problem as long as we are transparent about it. So that's already been done. And like I mentioned, we have a time lag between the time we order to the time we ship. So hopefully the kind of impact on profitability will be minimum, if any.
It's been great having you. Thanks very much, Tarak, for joining in and giving us a glimpse as to how business is shaping up. Just a